Let's run the Mark Minervini screens on Marketsmith and see what exciting stocks we can uncover. Two-time U.S. investing champ has 3 custom screens on the stock research tool Marketsmith. Minervini, if you don't know, is, in my opinion, the world's best living swing trader, trading from a few days to a few months generally. And let me show you how to access the screens and we will pull them up. He's got a 1-month trend template, 5-month trend template, and a 5-month wide trend template. Wow, that's a tongue twister. I'll show you how to find those and I'll explain what they are, and we'll just look at a few of the interesting stocks that come up. 3 things before we begin. Number 1, this is not investment advice. This is just education. I'm just showing you how to use these tools and maybe giving my opinion on some of the stocks they're in. Number 2, I would love for you to check out my partner Seeking Alpha Premium. It is an amazing collection of fundamental analysis articles and fundamentals. And then 3, I have a Patreon, $10 a month. I show you my portfolio and focus list. Okay, now let's get to the screens. So I'm here on Marketsmith, and Marketsmith is a subscription database. Costs about $1,000 a month, which is $1,000 a year, which is a ton of money. But if you make $1,000 off of one trade, then it pays for itself, right? So here's how you find these things. Now, once you find them, you can favorite them, and then they will be right here. But let's close this little side window for now. Let's pretend that I've never found them before. So you have this, I don't know, I'm just going to call it a window on the bottom. Oh, let me close this so we don't cheat. Okay, I had to close the little toggle switches. So you've got this list of menu items here. And you go to reports, click on it. You go to stocks, click on it. You go to technical, click on it. And then here are, oh, I'm sorry, there's 4 now. I guess they added one. The Minervini 1-month trend, that's kind of for, let's see, what is Minervini saying? Buying half position now, deck. Stop at 497. Let's just look at that real quick. Hold on. Okay, I just typed in Decker's Outdoor. Let's look at the daily chart first. It's obviously in a really nice uptrend, pulled back, made kind of a cap formation here, and I guess he's just kind of buying off of this little pullback buy right here. It's a little bit extended in my opinion. I'd rather get it down here. I need to turn off these notifications. Hold on. Okay, yeah, it's a little bit extended in my opinion. I'd rather get it down here near the 50-day, but huge numbers. Look at these EPS numbers. Should make $19 per share in 2023. Big earnings, single-digit sales, not too terribly impressive. Let's see if it offers a dividend. No dividend, but it's just a good money-making company in an uptrend, which is the kind of thing that he likes to invest in, right? Now, let's get back to our trend templates. So we open this panel down here, and we go reports, stocks, technical. So the Minervini 1-month trend template, this is a little bit more advanced. This one is going to give you, it's going to find for you power plays, which I'm not going to explain right now, and high tide flags. The Minervini trend 1 to 4 months. These are stocks that have been above their 200-day between 1 to 4 months. Minervini doesn't normally play stocks of that nature. I'm not sure why they made that trend template, honestly. The 5-month trend template, the stocks have been in an uptrend above their 200 days for 5 months. Gosh, sorry. Yeah, Minervini just bought Crane CR aerospace equipment. Okay, so let's get back to it. The Minervini 5-month trend template. This is stocks that have been in an uptrend above their 200-day moving averages for 5 months or more, and they are also above their 50-day simple moving averages. Minervini has said 98% of the stocks that he buys have been in an uptrend for 5 months or longer, because historically those are the stocks that have moved the farthest. Stocks don't really get moving until they have that trend firmly established. The other 2% is mostly power plays from the 1-month trend template. 5 months wide, it drops the above the 50-day simple moving average requirement, and it also drops the relative strength requirement. Stocks can, I think the 5 months template, they have to have a relative strength of 70 or higher. The 5 months wide drops it. I kind of like to use the wide one and then start with the highest relative strength, and because sometimes when you're buying a low cheat, the price is going to be a little bit underneath the 50-day, so I don't want that to eliminate good stocks. So let's click on the 5-month wide, and here it gives us 555 stocks. Let's just look. The 5-month trend template, 443. 1 to 4 months, 313. 1 month, 163. So the 5 months wide, and then there's all sorts of different ways you can screen this by market cap, by composite rating. That's a composite rating, obviously. I like to just do it by relative strength, because what's the most important thing, right? The strength of the stock price. We are buying stocks not because they have... Oh, hold on, I'm getting a phone call. Okay, sorry about that. My son called me. So, yeah, I like to just organize it by relative strength and look at the stocks that are performing the strongest. Relative strength is the price performance relative to the rest of the market. So, if I click on relative strength here, we'll have the 99s. Wow, there's a bunch of 99. Oh my gosh, there's a whole bunch of stocks with 99 relative strength right now. Let's just look at as many of those as we can in the next 15 or 20 minutes here. And let's just start rolling through them. Now, if you want to stay on Marketsmith, I like to start with the daily, and then if the daily looks good, I'll go to the weekly and the monthly. Some people like to do it in reverse, but that's how I do it. All right, let's just look at a handful of these. And the first 10 on the list, in case you're curious, are RETA Pharmaceuticals, 89 Bio, EZGO Technologies, EMAN, Carol's Restaurant Group, NVDA, never heard of that one, 𝐿F Beauty, Cheap Chinese Cosmetics. Is it Chinese based? I don't know. Cheap Cosmetics. Enil Chili. I don't know what the heck that is. Prevention Bio, Moonlake Immunotherapy, AVDL Pharma, Limbach Holdings. A lot of these are pharmaceuticals. Embrisa Distributor, Green Brick Partners. And let me show you. Let's do this too. Here is about the you know, I was going to say you could screenshot this, but I will export it into an Excel document and then copy and paste it into the description of this video. So I hope you appreciate that. That's going to be kind of a pain. Let's roll through some of these charts. Now you can spacebar through them. You just click spacebar and it changes the chart. So RETA Pharmaceuticals, RETA develops therapies for different diseases, and looks like this was a power play. We had this big, so you have months of dead price action. You've got a blast off of at least 100%, in this case 26 to 95. Then you have tight price action. You buy the breakout of the flag right here. I actually bought this one. And then you sell after you make a good profit. Gapped down painfully on earnings, but it's been working its way back up. I feel like there's a lot of supply to work through. There's a big gap to work here through. So this is not buyable for me right now. Maybe when it gets above 100, I would probably set an alert of 100. And to do that, you go set alert. RETA price 100. And then it will just alert you when you open Marketsmith. If you want to get an email too, you can. I don't need that because I open Marketsmith every morning. Okay, next one. 89 Bio ETNB develops and commercializes therapies for treatment of liver and cardiometabolic diseases. This is a pre-rev biotech, and it's a low price stock. Those are going to be volatile and dangerous. And see the large oscillations, which means you definitely got to catch it down here near the 50-day, and even so, you're likely to get whipped out of it. So I would be shy to do this one, maybe with a small position. There's high risk reward, of course, but it's just hard to stay in these bucking Broncos. Here's the weekly chart. Here's the S&P 500, and here is the stock price, obviously. Here's the relative strength, 99. It's sold off recently. Ran up, had a little climax gap up, has sold off, is getting support on the 50-day, but this is a really wild action. I'm going to pass on this one. I think it is on my watch list, on my focus list. Yeah, I was just looking. Here's the stocks on my Patreon, my portfolio focus list. I got it right there. Let's keep rolling. EZGO Technologies. I've never heard of this one. Chinese-based provider of short-distance solutions for electronic bikes. Okay, so Chinese stocks are riskier due to what's it called, geopolitical tensions, and because the books aren't scrutinized as carefully as American companies. But huge runs can be made. I made a bunch of money on NEO, N-E-O, during 2020. NEO electric, N-I-O, electric vehicles. Let's see, the numbers are weak, really weak. Losing, decreasing in sales, losing money. But the chart is undoubtedly up. So clearly people are buying this based on future expectations. And this is a power play from 0.5 to 1.5 is your flagpole, and it really didn't tighten up and offer much of a buy point. This is way too wild and low priced for me. Let's just click on the website. Why didn't it load? It's loading. We'll come back to it in a minute. Okay, here's the website. Oh, so not e-bicycles, they're scooters. I bet they're fun. So let's put this on. I keep a little list of penny stocks just for the heck of it. And on my Patreon, I like to show one moonshot penny stock per weekend. So let's put this on our moonshot list. Okay, let's keep rolling. And by the way, when I do this by myself, I would roll through these charts and, 15 to 30 seconds a piece. I wouldn't be taking several minutes like I'm doing here. This is just for demonstration purposes. Imagine, clever name, manufactures cutting-edge smart TVs, powerful smart cast operating systems, and immersive sound bars. Ooh, look at this tight price action. That probably means it's getting acquired. In which case we don't want to bother with it. Let's look up. I was telling you about Seeking Alpha Premium. I like to look, get my news from there as well. EMAN. Let's type in EMAN. Let's see. I don't see anything about an acquisition on there. Interesting. Oh, here you go. Merger or acquisition. Yeah, so it's getting acquired. So let's forget about it. So by the way, like I was saying in the description of this video, you'll have a link to Seeking Alpha Premium, my partner. And the best feature on Seeking Alpha Premium is all of these professionally written analysis articles which you can learn to do some great ground floor fundamental research on companies. We got to keep rolling. So far, we're 0 for what? 4? TAST. Burger King. Oh, okay. This is Burger King. So, boy, it ran up from... Is it only a $4 stock? Wow, that's surprising that Burger King... You'd think it would have been... Maybe it split and then it got pummeled. Did it get pummeled in 2022? Yep. But even so, it's surprising that it is so cheap. Ran from 2.5 to 6. Tried to set up. Tried to make a flag of sorts. And has broken down. And it's broken down beneath the 50-day. If you wanted to, you could set an alert to remind you when it got above the 50-day. I don't want to touch this one. NVDA, okay, superstar. Interestingly, even though its performance has been spectacular, look how weak the numbers were for 3 quarters in a row. That's why if you are trying to be an O'Neill type investor, buying, high-powered revenue and sales are the same thing. High-powered sales and EPS and so forth. When you're coming out of a bear market, very few stocks are going to have those numbers. But, so look, it's supposed to jump from $3 a share in EPS in 23 to $7 a share in 2024. That's why we're seeing this price movement from because of expectations. Monthly, this has been a great long-term hold, one of the best long-term holds in history from $4 in 2010 to $400 in 2023. I'm not a rocket scientist, but isn't that 100x? I think it is. So we have a nice cup here. Here's your handle. Here's your buy point. This is the weekly. Here's your cheat right here. And it's really extended looking on the weekly. No dividend. PE ratio is huge, 133, but don't worry about that. Some of the best stocks have started with a high PE ratio and they just keep getting higher. So here's your big gap on earnings. I like to wait 10 days or so. This would have been our time to buy it. Post-gap, we are getting some positive post-gap drift, post-earnings drift. It came back down, retested 400. Honestly, you could buy it today, set a real tight stop right here at, its low is 401. I do it at like 399 and just see if it holds. I'd say 50% chance it does. That's what I would do if I was going to get into it. But guess what? I'm already in it. Okay, so that's a good one. Let's do about, 5 more minutes or so. e.l.f. Beauty markets cosmetics and skincare products under the e.l.f. brand name. Is this a Chinese company or was I just imagining that? Let's look that up. e.l.f. Beauty. Oh, what did I do? Oh, here we are. About who we are. Our superpowers. I guess I made that up. Let's see. Let's get back to the stock. So this has huge numbers. This is what you want to see. The number one mover of stocks is present and future earnings growth. Plus 44, plus 71, plus 100, plus 223. Eye-popping EPS numbers. Revenue 26, 33, 49, 78. Eye-popping sales numbers. The problem with this one is it has already run up so much, right? Look at that. You're buying a stock that's long in the tooth, as we say. So let's see. Big gap up on earnings. And like I said, I like to wait 10 days or so. Our price point would have been right here. The bounce, pullback buy off of 100. It's a little extended now. I would just wait for it to keep sliding. If we're lucky, it would keep sliding sideways. And then when it gets near the 50-day, see, it will eventually tag up with the 50-day. That's when I would try it, when it makes a new base. You got a base here, you got a base here, you got a base here. But this is long in the tooth. I would really love to be in it. I would be wary about getting into it at this point. ENIC, Chilean holding company engaged in electric generation and distribution. So this is an electric utility company. Big fundamental numbers here. Finishing the right side of a base. Really low price though. And I don't like to buy utility companies. I'm going to pass. PRVB, Provention Bio, pharmaceutical company developing therapeutics. No earnings yet, but it is selling. Oh, and look at this tight price action. This one must be getting acquired. Look, on the acquisition, it went from $6.50 to $24. That's, I know biotechs are risky, but that is a reason to play biotechs. MoonLake Immunotherapy. This is another one. This is another pre-rev biotech. Switzerland base. Treats inflammation. Wow, look at this spectacular gap up. Let's look on Seeking Alpha Premium and see what the heck's going on. Okay, here's Seeking Alpha Premium. Again, link in the description. Shoot, what was that stock called? MLTX. MLTX. MoonLake Therapeutics. Jumps 128% on phase 2 win for skin disorder candidate. So that's why. And here's an analysis article. Oh, this is about its rival, causing ticks. MoonLake upcoming phase 2 result for inflammation drug, a major price catalyst. And wasn't that for sure? Wasn't that the truth? So this now becomes a potential power play. You've got fairly dead price action. You got to move from 24 to 52. So what you have to do now is wait at least 10 days. 10 to 20 is the sweet spot. And you want it to give back less than 25% of the move. So you measure that. And you want it to flag out and then break out of the flag. All right, let's keep moving. Here's another pharmaceutical. Let's find something that's not a pharmaceutical. Limbach Holdings, construction and maintenance services for heating, ventilation. Yeah, these HVAC system companies are doing really well. Just a beautiful, nice, established uptrend. And it doesn't take a rocket scientist to see that what you do is you don't FOMO into this thing, but you wait for it to get near the 50-day or for it to bounce off the 50-day, and you want to see it bounce. You don't want to see it splat like an egg. Last quarter, it had huge earnings, weaker sales, but numbers are all messed up from the bear market. Here's the weekly chart showing that nice uptrend. So here it made an Adam and Eve double bottom. No handle. Well, I guess we got a kind of a handle right here. Here's your handle buy. And another kind of an Eve double bottom. This had a really nice handle. Would love to have bought it right there. Wasn't on my radar though, but that's why we run these screens, right? To put these on our radar. Another handle of sorts right here. And this is probably your O'Neill handle right here. Certainly a little extended, but stocks can be in an uptrend for a year and a half. And this has only been a year or so. So we could get another 6 months out of this run. This was kind of a new issue. Certainly been performing well since 2019. So yeah, I would be patient and get it down here as it bounces near the 50-day. Let's put this on my on-deck list. Okay, here's my on-deck list. That is stocks in uptrends, but they just need a little more time to develop. Let's just do one more, and then I'll give you the symbols for all of these in the description, like I said. Ambrosia Distributi, that's a utility company. Boy, it really has done spectacularly well. I normally avoid utilities because they are rather slow moving, but this one sure isn't. It's, you know, it's really wild. A huge wild price action. Down 10% today. I'm going to pass for the moment. Green Brick Partners. This is a good one to end on. This stock's been doing really well. Owns, develops, and sells land in Dallas and Atlanta. Pretty weak numbers. Mid-single, well, 14% earnings, 15% sales. It's all about future expectations. Profitable company, making $5 a share. PE of only 9. No dividend. Long multi-year base. Breakout of the base. I would have liked to get in on this cheat right here, or kind of a high handle, buy it right there. Always easy in hindsight, right? Here's the monthly chart. It's been doing well since 2013. What do we do now? So we have this huge blast off on earnings, and I like to wait 10 days. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Obviously, you could have bought off this pivot and maybe got stopped out. Or you can actually, this is called a ledge. Ledges are bearish and generally break to the downside. But when they break to the upside, that's actually a pretty good spot to buy, because you can buy right when it breaks out of the ledge here. You can set a really tight stop here, and then you have asymmetric leverage. And it's building kind of a cap along here. I would just like to see it stay tight for a week or two and let the 50-day catch up. Then when it's close to the 50-day, it bounces off. That's where I would buy it. That's where I'm going to leave it today. Let me know your comments on any of these stocks, or if you have questions on the Minervini trend templates or Minervini's trading style, just let me know. I'd love for you to check out my Patreon service. It's only $10 a month. I think that's all I need to say. Thanks for watching. Take care.